Hey, welcome back. In this video, I'm going to show you how to programmatically find stocks that are poised to break out. Now, there are many different setups you can use to find stocks that are going to break out. In this particular video, I want to focus on stocks that were in an uptrend and then are consolidating in a very narrow range. And so what you'll often see as a stock is in an uptrend, and then there'll be a few week period when that stock really trades within a very narrow range of a few percent, and it trades in that range for a few weeks, and then once it finally exits that range to the upside, it takes off in the same direction as the uptrend before. So you can often capture a really powerful move if you're able to purchase the stock right when it's exiting this tight consolidation. And to illustrate what I mean, I have a few charts and articles pulled up here that I'll show you real quick. The first is the Investopedia article, and it talks about this exact setup. It says a tight consolidation is when a stock moves sideways in a narrow range. Eventually, either the buyers or sellers win out, and the price breaks from consolidation into a trending move. And so the example shown here, it shows this example of Allstate, where there's an uptrend, tight consolidation, and then once it breaks the consolidation, there's a powerful uptrend continuation, and then it consolidates again. And the reason I was thinking about this setup and wanting to do a video on it is because I was actually looking at Bitcoin data a few weeks ago and was noticing this exact setup, and it actually came to be. So if you look at the chart for Bitcoin here, you'll notice that Bitcoin crashed with everything else, and then it uptrended for a while in a recovery. And then you'll notice here throughout the entire month of May, throughout the entire month of June, entire month of July, it just got tighter and tighter in this range. And then I was watching it here where it was just right around 9,000 to 9,100 or 9,200, right? It was in this very narrow range. And I could just tell once it broke out of that range that it was going to explode. And sure enough, if you look what happened, once it exited this range, you had this giant candlestick here, and we got a roughly 30% move from 9,000 to, I believe it traded over 12,000 per Bitcoin. So that was a great example recently of when an instrument was tightly consolidating, and then if you placed a trade right when it broke out, you would have got a nice gain there. Another example I was looking at was recently the Russell 2000, and this was about a week ago, I think. And yeah, I was watching the Russell 2000. It was very range bound for a while. And if you zoom in here, you can see for the last couple weeks of July, it was in a very narrow range here. And then I was wondering whether the Russell 2000 was going to eventually participate as much in the rally as, for instance, the QQQ or the S&P 500, and then it actually outperformed the last week or two, and you'll see when it broke out of this consolidation, you had some pretty large gains here. So it broke out above 149 here, and it quickly ran to 156. So there was a nice quick gain there in the Russell 2000. And so what I want to do now is show you how to actually programmatically find these narrow consolidations using Pandas data frames. And we're going to piggyback off of our last video where we captured candlestick data for all of the stocks in the S&P 500. And we're going to continue on our scanner and scan through all those stocks to find stocks that are either they're tightly consolidating now, so they're in a narrow range, or two, they are breaking out. So they were in a tightly consolidating, trading in a narrow consolidating pattern, and then the most recent candlestick broke out. So we want to find stocks that are one, poised for a breakout, and two, stocks that are currently breaking out. If we anticipate, we get a little better entry, but also, we don't have that confirmation. Or if we wait till it's actually breaking out, then we have that confirmation, but we have to pay a little bit more for that privilege. So let's dive into the code, and let me show you how to do that from the command line using the exact same data sets that we already captured in our previous video. So what I'm going to do here is clone the repository that we created previously. So if you have been following along with the last lesson, we created this repository and we wrote the code under hacking the markets. So github.com, hacking the markets /candlestick screener. And what I'm going to do is clone this to my desktop. And so if you want to start from here, you can clone this and see what we're doing. So I'm on my command line, right? And let me remove any remnants I have of that. All right. And so I'm going to clone it fresh. So I'm going to do git clone, and I'm going to clone that repository and get all of that source code, right? And then I'm going to get a new window going here, and I'm going to open our candlestick screener. So I'm going to open that up, and let's just run it real quick. So this is right out of the repository. I have my application, and I have like my pattern detection function. And so like I showed you how to scan the S&P 500 for different candlestick patterns. So I'm going to run that real quick, right? And that's how we did it from the command line. And then we have this Flask application in app.py, and I can run that with Flask run, and that'll run a little local web server. And then we built this little application here. So I go to localhost 5000, and I can scan for engulfing patterns, for instance, right? And so I scan that. It goes through all of the different CSV files we had that we retrieved from Yahoo Finance, and we scan for bullish engulfing patterns, and we pull up the charts and find all the charts that match that signal. All right, so this is using datasets under datasets daily, and I've actually committed all these datasets to the repository, so you can just follow along starting here. And so what we have, even though it's a week into August right now, so these data sets right now are for January through July. So this ends on July 31st. So there's actually been a week of trading after July 31st, but that's okay. We're going to apply it to this July data. And then so that'll let us look at the current week. So we don't know let's pretend I don't really know what happened last week. I can see how well my scanner would have worked on this data, and then see if it successfully detected any breakouts for the following week. So let's pretend this is the end of July, and we're looking for breakout candidates for the first week of August, right? And then after we're done with this, we can actually update these snapshots for the first week of August, and let's scan for breakouts for next week, right? So this is going to serve as a good test of what would have happened if we used this system at the end of July, right? All right, so cool. I got my data sets. Let's start writing some code to make this happen. So what I'm going to do here is I'm going to stop this web app. So we're going to first do this from the command line, just to scan and filter. And then once we can do it from the command line, we can just make those just reusable functions. And then we can import those reusable functions into our Flask web app, and then use that as part of our web-based technical screener. So first things first, let's see if we can get this working from the command line. So I'm going to create a new Python file, and I'm going to call this chartlib.py. And the reason I'm calling it chartlib, I'm going to run it from the command line and test it, but then later on we can import the functions in this file and use them on the web. Okay, so the first thing I'm going to do is I'm going to borrow from app.py for now. And what I want to do is just read in data frames for all of these S&P 500 symbols. And since we're already doing this in the index file here, I just want to copy a couple lines of code from here. And so it's going to be these 2 lines of code where we loop through all the files in the dataset directory and then read them into data frames. So I'm going to paste this in here, and I'm going to indent it. Okay, so we have for file name in os.list directory. So we got to import os since we're using the os library. And then we're going to say data frame equals pandas.readCSV. So we're reading through all the CSV files in this daily directory, and we're reading them into a pandas data frame. So since we're using pandas, we need to import pandas, right? We'll import the pandas package there, and we'll have these data frames. And I'll just print df as we're looping through. And I'm going to click this play on chartlib.py and run it. And you'll see it's printing out a bunch of data frames on my screen. Probably 500 of them, right? Because we're scanning through the S&P 500, right? And so you see we have the date, open, high, low, close, the adjusted close, and the volume of each of those symbols. And this is 147 days of trading. So from the first trading day, January 2nd of the year, through July 31st, where our data set ends, we have all this OHLC data for these symbols, right? So what do we want to do? Well, we want to find stocks where the stocks have recently been trading in a narrow range. And so what that means is all of the closes, we're going to use the closing price, and we want the closing prices to be relatively close to each other for an entire period, for a long period of time, let's say a couple of weeks, right? And so let's find stocks where the closing price is in a narrow range for the past couple of weeks. So let's write a function to do that. So I'm going to write a function called is consolidating. And basically what we want it to do is accept a data frame of OHLC data and look at the close for some parameter for 14 days, for instance, and tell us whether or not it's been trading in a narrow range and return true or false. So let's write that function. So I'm going to define a new function, and I'm going to call it is consolidating, right? And it's going to take a Pandas data frame as a parameter to start. And we'll make this more customized as we go. All right, so it takes a Pandas data frame, okay? And so what do we want to know about that data frame? So let's think about how this would logically work. Let's say we have a stock that's closing in a narrow range. Let's say it's trading between 98 and 100, right? Or it could be 300 and 295, for instance. It's just trading in that range. So we want the closes to all be within a few points of each other. Now, if it's a $400 stock, it can be a few more points. So what we want to do is use a percentage. So let's say 2 or 3%, right? So we don't want to be so narrow that we can't find anything. We want a couple percent, I think, is a good number. So if there's a $100 stock that's been trading between 98 and 100, that's a pretty good narrow range we can look at, or 97 and 100. If it's $400 stock, let's say between 390 and 400, right? And so let's find stocks that have been closing within a couple percentage range. So for our is consolidating function, right, we're getting a data frame of all of the closes. We're really only interested in the most recent closes. So let's say the last 14 days, right? Or let's say since it's 3 weeks of closes, let's use 15 days, right? And so we can use recent closes. So let's get the recent closes from our data frame, the last 15 data points. And we have this array indexing that we use on a Pandas data frame, right? So if we want the last 15 records from this data frame here, right, we could use this negative indexing. So we can go negative 15, right, to the end, right? So this will start at 15 records ago, or 15 rows ago, until the last row, right? And so if I do recent closes and print that, let's just print it, right? And that, or let's just do the last 5 closes just to show you what this looks like, right? And then we'll call our function. So I'll type is consolidating df. So we're looping through them. We're passing the data frame to our function, and we're going to print the most 5 recent closes. So if I run that, right, you'll see as it runs, right, we have the most 5 recent closes, the 27th through the 31st. So that's the last week of closes, right? And so let's say we want the last 15. We'll do 15, right? So we run that, and this will show from what looks like July 13th through July 31st. It excludes weekends because the stock market is not open. So we have a way to isolate our last 15 closes now, right? And so the next thing we want to do is check if these closes are in a narrow range. If it's been oscillating around a lot, we don't care about it. We want a narrow range of closes here. And so let's do this. So I'm going to call this recent candlesticks, because this isn't actually the recent closes. This is the most recent candlesticks, right? So a good way to determine whether the closes are close to each other is we can get the maximum and minimum close value from this series, right? And we can use Pandas max and min functions to do that. So I can do max close equals recent candlesticks, and then since the column is called close, I'll type close as the key here, and then I'll type dot max. And then I can do min close equals recent candlesticks close dot min, right? So let's print out the max and min close. So print the max close was, and the min close was, right? And then I can just do dot format, and then I'll pass it max close and min close, right? So do that, run it again, right? And so for this particular stock, the max close was 115 and the min close was 107. So those are a bit too far apart in our few percent range that we were interested in. So I'm going to use, let's start with a 2% range, right? So let's think about this. If the maximum close for the stock was 100, let's say we want the minimum close to be 98, right? And so let's check if the minimum close is greater than the max close times 0.98, right? And so if we're interested in stocks that have traded in a 2% range, right, if the maximum close was 100, then the minimum close must be at least greater than 98, right, to be within 2%. Because if it was like 96, right, it would be 4% away, right? So we want all of our closes to be between a min and max of 98 to 100, right? So we'll just say if the min close is greater than max close times 0.98, then we'll say print is consolidating, right? And so let's do that. So I'll run it again. And instead of saying is consolidating there, I want to return true. And so I only want to print the data frames here that we're scanning through if it is consolidating is true, right? And so let's do that. So I'm going to delete that line. I'm going to delete the recent candlesticks, and this should be our full function, right? So we're going to loop through all of the CSV files, read them into a data frame, and say if is consolidating for that data frame, then print is consolidating, right? And then if you look at the brackets there, let's just put the file name. So I'll do dot format file name, and let's just print the ones where it's consolidating in a 2% range, right? And if I scan it, you'll see that Costco is currently consolidating. That's the only one that came up in that 2% range for the last 15 candles in July. So let's pull up Costco. Let's see what happened. So if I go to TradingView, for instance, so if we look here at the end of July, you see indeed Costco was consolidating in this narrow range here, right? And the closes were all in this couple percent range here, right? Until July 31st. That's July 31st. And then actually, look what happened. It broke out of that range right afterwards. So if we look at the following week of data, that's not part of our data set, you'll see that Costco indeed had a pretty explosive move out of this tight consolidation here and gained, you know, a few more percent. So that would have been a pretty good trade. And if you look at the setup for Costco here, had a nice uptrend and it had this narrow consolidation and then busted out again upwards. So Costco, from here at least, it looks like our scanner, this simple formula found a pretty good candidate for a continued uptrend. And this is confirmed by the fact that we had the July data, we scanned for a narrow consolidation, and then we actually had confirmation the following week that wasn't part of our data set, and you see it continued upward, right? But it's possible it would have continued consolidating for longer, or you know, maybe it didn't break out at all, and for some reason it gapped down. But in this particular case, it was a pretty good breakout candidate. Now, that was a pretty narrow range, and we only found one stock. Let's see if we can expand our parameters a little bit to find a few more examples. So I'm going to go beyond 2%, let's say 2.5%. And so for this threshold here, right, let's make this adjustable in our function. And so let's have percentage as a parameter, and let's make that percentage adjustable. So we'll have the default be 98% like that. Or let's have the default percentage be 2. Let's use the number 2. And so to calculate this dynamically based on a parameter, let's say threshold equals percentage divided by 100. So 2 divided by 100 would be 0.02, right? And we'll do 1 minus that percentage, and that'll get us our number 0.98 dynamically, right? So we'll call that threshold, and we run it. We should get the same number, right? And so now we can use this in our library, and let's say we want to pass a different percentage when we call the function, you know, from our chart, right? If we wanted to have a little input box where the user could specify the percentage, we could let them specify 2.5 now, and that 2.5 would override this 2. And if I run it now, let's see if we find any more candidates. All right, so you see we got another one. We got this Walmart consolidating. So let's look at Walmart, what happened. So Walmart was a similar setup. So it looks like Walmart was in a pretty narrow range here, but it doesn't look like it's quite broken out yet. It's just in this narrow range here still, right? It just kept consolidating. So I don't think Walmart, so that'd be an example of one that's still consolidating. And then let's look at CPB. Right? Oh, and that one is really narrow right now, right? And it's still consolidating for another week. So that looks like a fairly good candidate for a potential breakout maybe next week. And if we zoom this out further, yeah, you can see, yeah, Campbell's soup. Get in on that Campbell soup trade. We have this uptrend here, and then it looks like it has this triangle here, right? And it's gotten tighter and tighter here. And so eventually we think this is going to have an explosive move. And then when we're anticipating this breakout, right, we can get some more, we can focus in on this and use some of our other techniques to look at real-time data, like starting next week, and be really watching the stock closely and place our trade automatically whenever it breaks out of this range, right? So these were examples of stocks where we didn't necessarily have any confirmation, right? You saw Campbell Soup still consolidating, Walmart still consolidating. It looks like Costco actually did break out, but let's see if we can find some additional stocks that were already breaking out on the very last candlestick, but were consolidating before. So let's make another function called isBreakingOut. So I'm going to define a new function called isBreakingOut, right? And this will also accept a data frame. And then let's have this have a percentage that's customizable as well, right? And so if we do that, what do we want to do here, right? We want to check the previous 15 days, but exclude the very last candlestick. So we're going to use our indexing again on our Pandas data frame, but we're going to go all the way up to the next to last candlestick. So how do we do that, right? So we want to get the last close, right? So let's get the last close first, right? So the last close of our data frame is going to be -1 until the end. That's the last row, right? So it's the last row and then till the end. So this is actually only one record, right? And then we want the close. And then with Pandas, we have to do this dot values at 0 just to get the value only. And so this will give us the last close. So let's see what that looks like. So I'm just going to print that. I just print these along the way to make sure we're going okay. So let's go ahead and call our isBreakingOut function. So we'll just call isBreakingOut, and we'll pass it our data frame, and it should print the last close. So we'll see one number a bunch of times, and we just see a bunch of last closes getting printed to our screen. So what we want to see, if we want to see if the last close is actually breaking out, we want to detect if all the candlesticks before that last close were in a tight consolidation, and that last close went outside of that consolidation, or it went above the maximum of the consolidating days before, right? So how do we check if the last 15 candlesticks before the last close were consolidating? Well, we already have the isConsolidating function that accepts a data frame, right? So let's just reuse that function and pass it a data frame. So we'll say if isConsolidating, right, data frame, and we don't want to pass it the last candlestick, so let's pass it a data frame that's a subset of the entire data frame. So we want to pass it the data frame all the way up to the last candlestick. So we'll use indexing where we start at the beginning, colon, till -1. And so this will start at the beginning and go to up to, but exclude the last candlestick, right? So if we know it's consolidating, the next thing we want to know is if it's breaking out. So we want to check if the last candlestick is greater than the maximum of the consolidation period. So the consolidation period are the recent closes. So let's create a new variable called recent closes, and this will be a subset of the data frame as well. And this will be from -16 to -1, right? And so this will be the previous 15, and then this will be this last close. It's the very last one. And we'll make this -16 and -15. We'll add parameters to make that more dynamic as well, since we want to be able to adjust the number of days, right? So I'm hard coding that now, but we'll update that and make it a little bit better. So that'll be our recent closes. And so we want to check if the last close is greater than the recent closes, close.max, right? So that's the maximum of the prior 15 days when it was in consolidation. We know it's consolidating because our isConsolidating function said true, right? And we'll also put a return false here so that the cases where none of this was true, then we know it's not consolidating. So if it returned true and the min close was greater than that threshold, then we know we're consolidating. And then we want to check if the last close is greater than the maximum of the recent closes that were in the consolidation period. And if that's the case, we can return true. And if none of that happened, then we can return false at the end. So this will return true first if we hit this condition. Otherwise, it's not breaking out at all. And so now in our main loop here, where we're looping through all the files, we'll say if is consolidating, and then we'll also do an if is breaking out, and then we'll do percentage, or we don't need a percentage here. It'll be the default, and then we'll say print is breaking out. Format, file name. So I'm going to run this again. Let's see what happens. We still have just consolidating. And the reason for that is we still have percentage as just 2 here. So the default is 2. So what I want to do here is set a percentage default on is breaking out to 2.5. And our 2.5 is the one that actually found more candidates. So since I have is breaking out calling is consolidating, I'm going to set percentage equal percentage. And so let's try it with 2.5 and see what we get. Okay, so that actually got us some values. So you see we have Costco's consolidating, Campbell's is consolidating, but we have these 2 new ones, CLX, which is Clorox, and then we have TMUS, which I believe is T-Mobile. And so let's look at what happened there. So we have CLX is breaking out. So if we look there, you see Clorox, which has really taken off this year, I guess with the virus and all of that. So we have in July, towards the end of July, it was consolidating for a long time. And then it looks like here, right here is where it actually breaks out. So July 31st, right here, we got that huge candle. It did a quick pullback and then continued breaking out. So our code has detected that Clorox is recently, as of July 31st, is broken out of a tight consolidation. And so this looks like a good candidate to continue this uptrend here. And if we look at the other one, we have T-Mobile, right? We pull that up, and we look at the end of July, indeed, it was tightly consolidating here. And then July 31st, the last candle we looked at, right? It had this large green candle here, and it broke out of this consolidation. And if we look what happened the following week, looks like that did continue. And then there was another pop. Looks like Friday had this huge up candle here, and our code has detected this breakout. And look, sure enough, that led to some news probably. So if we look up T-Mobile, I don't know what happened. So T-Mobile, August 7th. Let's see if there's any news on T-Mobile. So if we check a T-Mobile stock on, so you see T-Mobile had this big pop. Why? So let's see what happened. Right, shares of the wireless provider surged by more than 8% to a new 52-week high following better than expected quarterly earnings. So T-Mobile earned 9 cents revenue compared with estimates, right? And so this happened, but a week prior to that, we detected that it was exiting that consolidation for whatever reason. So using the technicals, we were able to detect that something was happening right under the surface, and we would be able to make that entry. And then sure enough, we would have gained a great profit. The earnings report was good. This wouldn't always happen, obviously, but looked like this was a good case where we detected a stock was breaking out, and we're able to place a trade, and we're able to capture a quick move there. So we could have bought a call option, for instance, as soon as it was breaking out of this range. I think this is a pretty good lesson, right? We looked through all the different stocks in the S&P 500. We loaded them into Pandas data frames, and we used this indexing on the data frames to analyze particular ranges of candlesticks inside of this data frame. So we did this on our data up through the end of July, and now that's the end of the first week of August. What we could do is in our app.py, right, we could click a button, update our snapshot for the latest week, and we could scan for consolidation and breakouts for the following week and start all over again. So that's it for this video. I just wanted to focus on that one particular setup. Stay tuned for future videos, and if you like what you see, subscribe, like the video, participate in the forum, follow me on Twitter, all that stuff. So see you next time.